We've got an earnings alert to tell you about right now. Numbers coming in from Dow Component and American Express hitting the tape. Earnings of $2.47 per share. That beat the street by 6 cents. Revenue also topping estimates. In its press release, the company is saying, quote, the demand for travel has exceeded its expectation throughout the year, with spending on T&E increasing 57% from a year earlier, and that spending volume in international markets surpassing pre-market levels for the first time this quarter, both on an FX-adjusted basis. So American Express backing its full-year revenue growth forecast and saying it expects EPS to be above its previous range. And we've seen all week in terms of travel specifically, but even more broadly, with the exception of maybe some of these advertising businesses like Snap, earnings coming in better than people expected. And yet, of course, there's continuing worries about inflation and the like. But advertising would be the piece that would actually hurt the most.
Yeah, American Express is actually down by about 3%.
Yeah,
the company is saying for their full-year earnings per share guidance range, $9.25 to $9.65, and that is above their earlier guidance, but the street's already at $9.91. Yeah. So maybe that guidance is what's kind of putting a little bit of a crimp in things, because everything that Steve Squarey says in this is talking about great numbers.
Right.
I wonder if that's an apples-to-apples comparison. I want to dig a little deeper and double-check on that right now.
Well, it looks like it's apples-to-apples.
Yeah, but based on the
people know. And you could probably say there's some good news in American Express with all what we think about the rebound in travel.
Here it is. Okay, more comments from Steve Squarey. We have not seen changes in the spending behavior of our customers, but we are mindful of the mixed signals in the broader economy and have plans in place to pivot should the operating environment change dramatically, as we have done in the past. So this new guidance that they're giving may be a reflection of a little more caution on some of those issues, too.
Well, they're not going to do as well in a recession as they do in
the other issue you have is Forex, because when he says the travel is up and the spending is up internationally, that's with Forex taken out of it. So, foreign exchange is also going to have a hit.
But like Stephanie Link said yesterday, most people don't necessarily make buy and sell decisions based on losing, currency headwinds.
That's true.
But you certainly would, if you're dependent on travel.
Yep.
You ever go to things are expensive at the supermarket. Every time I go, I don't know why I'm always there, but I'm there a lot.
Business travel in particular.
But if things are, everything costs $10. It's like everything, mozzarella cheese, everything costs without mold.
Yep.
Even to hold the mold.